Hey everyone, welcome back. In this video, we'll dive into Oracle's latest earnings release, the massive backlog that shocked Wall Street, the recent price moves, and what the outlook looks like for investors as we head deeper into 2025. Oracle has been making headlines not only for its strong cloud and AI growth, but also for its involvement in the potential TikTok deal in the United States. This is a big moment for Oracle, so let's break it all down. Let's begin with the earnings. For the most recent quarter, Oracle reported revenue of about $14.9 billion. That's an increase of 12% compared with the same period last year. Cloud revenue, which includes infrastructure and applications, was $7.2 billion, growing 28%. Within that, cloud infrastructure, also known as OCI, saw the most impressive growth, jumping 55% year-over-year to reach $3.3 billion. Cloud applications, which covers Oracle's SaaS offerings like ERP and NetSuite, also grew at a steady double-digit pace. On the earnings side, GAAP earnings per share came in at $1.01, while non-GAAP earnings were $1.47, representing a 6% increase. But the headline number was something entirely different: Oracle's remaining performance obligations, essentially its backlog of contracted revenue. This figure came in at a staggering $455 billion, which is up more than 350% from last year. That backlog means Oracle already has years of revenue essentially locked in. This tells us one important thing: customers are signing massive, long-term deals with Oracle, particularly tied to AI and cloud computing needs. Now let's talk about the outlook. Oracle has given very ambitious guidance. For this year, management expects cloud infrastructure revenue to grow 77%, reaching about $18 billion. And looking further out, they project that number could scale to over $140 billion annually within the next 5 years. Of course, this kind of growth comes with heavy investment. Oracle is building out more data centers and expanding capacity to handle AI workloads. That spending could weigh on margins in the short term, but management is confident that scale will improve profitability over time. So how did the stock react to these numbers? Investors loved it. Oracle's stock surged after earnings as the market focused on the backlog and the cloud growth story. Analysts also raised their targets. For example, Jefferies boosted its price target to around $360 per share. After the initial pop, the stock cooled slightly as traders took profits, which is typical after a strong rally. Right now, consensus analyst targets are in the $340 to $360 range, suggesting there's still some upside from current levels, but it also means the stock is already priced with very high expectations. Now let's consider the key drivers and the risks going forward. The first big growth driver is AI workloads. Training and running AI models requires enormous compute power, and Oracle is winning contracts in this space. Second, Oracle's multi-cloud partnerships are unique. The company has positioned itself to run its database services not only on its own infrastructure, but also on Amazon Web Services, Microsoft Azure, and Google Cloud. This approach is giving Oracle access to customers it couldn't have reached otherwise. And of course, the $455 billion backlog gives the company visibility and confidence in future growth. On the risk side, the heavy capital spending needed for AI could put pressure on margins. Competition from AWS, Azure, and Google remains fierce, and these companies still dominate the market. Finally, valuation risk is real. When expectations are this high, even a small slowdown could lead to sharp pullbacks in the stock. Now, let's not forget the latest news making waves: Oracle's potential role in a TikTok deal. Reports suggest that if TikTok's US operations are forced into new ownership or hosting arrangements, Oracle could play a key role in handling the data side, especially in the areas of security and compliance. This would not only bring in significant business, but also position Oracle as a trusted player in the geopolitical side of cloud and AI infrastructure. While details are still developing, it's another sign that Oracle is becoming central to more than just enterprise IT. So what's my take? Oracle is in one of the strongest positions it has ever been in. The AI-driven demand for cloud is real, and the company's backlog ensures that growth is not just a one-quarter story, but a multi-year runway. Over the next 12 to 18 months, I see Oracle stock potentially moving into the $340 to $380 range if execution stays strong. But given the stock's big run-up, I also expect some pullbacks along the way. For long-term investors, those pullbacks could represent attractive entry points. For traders, the high expectations mean volatility is very likely. On the technical side, support lies near the most recent consolidation levels, and resistance sits just below the all-time highs. A strong breakout above those highs with volume would be a bullish signal. To wrap it all up, Oracle has posted a stellar quarter with explosive growth in cloud infrastructure and an unprecedented backlog of contracts. With AI workloads, multi-cloud partnerships, and a potential TikTok data hosting role, Oracle has powerful tailwinds. The challenge now is to keep momentum while managing costs and competing with the giants in cloud. What do you think? Is Oracle stock just getting started, or is it already priced for perfection? Let me know in the comments. And if you enjoyed this breakdown, don't forget to like the video, subscribe to the channel, and hit the bell so you don't miss future stock reviews. If you want to see what we were expecting before earnings, check the Earnings Previews playlist. It's interesting to compare expectations versus reality. Thanks for watching, and I'll see you in the next one.